Okay, Stanley Black Decker, SWK on New York is really taking a beating today on Tuesday, January 22nd. It's down 15% on basically a little bit weaker guidance. I personally think it's overdone. I'll go through those reasons here. First of all, let's just say they beat on the top line. Revenue is 3.63 billion as opposed to 3.62, which what analysts expected, and they beat by a penny when adjusting for one-time cost-saving program that they put in. Okay. Then it's the guidance. It's really the guidance that spooked people, but even that I'm going to say is a little bit overdone. So they're now forecasting earnings or guiding to 845 to 865 for 2019, and FactSet analyst consensus is for 879, and that's before today. So obviously they'll adjust and probably go down a little bit, but that is only minus 3.9% and minus 2.8%. That's the range off from the consensus that they are. So it's not a big difference. However, the stock's down 15%. Those are down 15% today. On a calendar year, 12-month basis, it's down 33%. And this is a high-quality company, very steady, very reliable. The numbers still bear that out. I'm going to show you the profile in a second, of course, and I just think it's an opportunity more than anything. By the way, we did a video on this one back in November when we first launched the site. We did a really soft launch. We didn't even really tell that many people. We just kind of put it up, and we were just kind of feeling our way around trying to figure things out. But I think we're on really solid ground now. So go watch that one. I think we said it was a good company. We wouldn't buy it yet. And now we're getting a lot more serious about buying it. In fact, I can almost say you could just jump in and buy it now. Although trading can always throw you for a loop. But in terms of value, it seems to be a good time. Okay, let's jump into our model. And this is, of course, before today's earnings release. We'll get that in a day or two. And you can see the return on capital has been outstanding for this company. It just, climbing each and every year. It did seem to peak out around 2015, it looks like, at 28, and it slid down a little bit to 24. I don't think it's going to change much based on this earnings release. It'll probably, it'll be around 24. Maybe it'll slip to 23, but I don't think so. Now, on a default basis, we're saying it's worth 141. I haven't touched this forecast at all. It's just the algorithm doing this. Now, before this, back in November and earlier, we're saying it's a really great company, but it looks a little rich, and we're finally getting an opportunity here to buy this. And it always seemed to look rich in our work. This is the first time it's actually looked cheap. Okay. So that's awesome. I think it's pretty exciting. Now, look, I'm not saying, again, trading can be a funny thing. It can trade down for a while before it actually gets to a stable price. But having said all that, I still think this is just a really good opportunity. Okay, so where's I going to conclude with that? Yeah, just that, it's undervalued. We finally get an opportunity. Oh, I know what I was going to say. Don't get emotional about it. Because if you've done any investing at all, you'll have gone through this. I've gone through it. I still go through it. I look at a company like Black & Decker and I go, if I could only get it at, 120 or something like that. And, it hits the 120. And it hit it because there was a little bit of bad news, lower guidance. And then you get all like, oh, maybe I'm wrong. Maybe it's going to get worse before it gets better, and you get all tied up, and you just can't do it. Okay. Now, it doesn't mean it's going to go straight back up tomorrow. Stocks don't work that way, but it could have a little bounce, could go down a little. I mean, there's any number of scenarios on the trading side, but long-term fundamentally, it's hard to get it at this price. So, I'd say it looks like a good time to get in. That's Stanley Black & Decker, SWK.